Good afternoon, everyone. This is Joe Henches, and this is Beyond the Chart, and it is Saturday afternoon, October 26th. So this is kind of my weekend update. I'm going to focus just on this update on the indices, where we're at. Take a look at daily and weekly, and then tomorrow I'll get another update out talking about trade ideas, kind of an update on some of the ones I mentioned last week, and then talk about some other things that are moving around. So let's take a look, starting off with the Dow Industrial. So the Dow was up 61 points on Friday, continued to push here, as you can see. Now, I am getting a little concerned that we may be getting some, not necessarily on the Dow yet, but I'll talk to you about that. We may be getting a little bit of some negative divergence coming in on some of these indicators. The Dow's lagging, and until, if I don't see this, this has got to get above this point here. Now, I really think it probably is, but we may be in for a little bit of a correction this coming week. We'll just have to keep your eye out on and have your stops close. Look at the S&P 500, and I'll tell you why. This is a weekly. I need to put it back on daily for a minute, and then I'll go back and take a look at these on a weekly basis. Again, pushing higher, look very nice, but here's where some of the divergence is coming in. You can see not quite here, a little bit on the daily. You can see how this went to a higher high on Friday, and the indicator didn't. Now, that's pretty short term. We'll see whether or not it really plays out. This one's not so much of a divergence. On the RSI, 10-day RSI, it's clearer that you're getting divergence. Now, when you get this, like here, when you get this, you can't ignore it. And it happened on NQ Mobile, which I talked about. It tells you something's up. Okay, so it gives you, the warning flags are out, and you just don't know what kind of a correction am I going to get. And I'm going to show you a couple other things here in a minute. But anyway, so that's why I think something may be up, and it could be nothing more than a correction pullback to the blue line, maybe a little bit more severe than that. The Dow transportation average, the transports and the industrials should stay in sync. The transports have been leading, the industrials have been lagging. I've talked about that before. Okay, so are we getting anything here? Not so much on the DI plus, the RSI, and so we're getting no negative divergence on the transports. So nothing on the industrial, so a little bit on the S&P 500 and the NASDAQ we're getting, definitely here. So it wouldn't be unusual to see the NASDAQ pull back. And although we're not getting it on DI plus. So sometimes, when you get the indicators showing it in both places, I feel a little more comfortable if something's up, but anyway, this is enough of a warning to just kind of like say, okay, we could be getting a little bit of a pullback. We've had a pretty strong move here by the NASDAQ. Did I do the New York Composite? I was trying to think. Well, again, you're seeing it here on both indicators on the New York Composite. So I do think this is going to continue to push up more, but even this, I think, is potentially going to pull back. So now I want to go back and look at the Dow on a weekly basis. This is something I hadn't done in a while. Now, I've got some Elliott Wave stuff in here. I think the main thing I want to say is, some people say that we're in a new bull market. I'm not convinced. On a weekly basis, even a monthly, I think this whole thing that happened in 2008, 2009 is potentially the first move in a bear, and we're getting a rally that's a bear rally. Some people have marked out and said, nah, I think this is a new bull leg, but I'm just not convinced. And the main reason is because I don't think that we saw enough of a correction of the major move that happened over, in basically the 19th century. So we'll see. Some people say, well, we corrected about 50% of the whole move from 1932 here, point-wise, and that's true, but something about it visually just doesn't seem to sync up. So I'm a little wary. Now, I'll tell you that to me, the line in the sand is if this entire wave, this is potentially a B wave. Okay, so we've got A, B, and then another move down, C. Um, if it gets above 17,134, which is 10% higher above where we are right now, if it starts trading above that point, then yeah, I'm convinced we're in a new bull market, and it's like we're marching forward. But B waves have the potential to get to that kind of point in terms of percentage of this A wave down. And I'd really, if you guys are new, if you're new into a technical analysis, new to look at, I really encourage you to take a look at, Elliott wave, take a look at it to try to understand it. You don't need to become an expert, but to me, when you look at this is the move from 1932. Okay, this is the part of the crash from 1929, 1932. You had this huge rally, this move down in 37 into 30. 38, 37 to 38, kind of rallied up, and it never really bottomed until 1942. And I remember reading this one book, Great Depression Diaries, and I mean, these guys were talking about how it just felt like really nothing had really changed. And people, out here into 41, 42, and of course World War II had started, but then you get this big move 3, this sideways move 4, and the corrections in Elliott wave alternate. Okay, if this is a sharper pullback, kind of a zigzag, then this should be a sideways, more complex. And that hesitance, if this would have been complex, then this should have been a sharper pullback. They alternate. It's just the way they were. Let me look at this one. Here's 5 waves up. Okay, here's the 1987 crash. Okay, that's a very sharp correction. This one was more of a zigzag kind of correction, complex, more of a complex correction. So they have a tendency to alternate between the moves. And again, 5 waves up, 1, 2, 3, 4, 5. Now we're in a corrective mode, and we'll just have to wait and see, is this a B wave and we got another leg down, or whether are we off and running into another bull move here. Now the other point I want to briefly touch on, because I was kind of curious about it actually, is just kind of in terms of giving yourself heads up. Let me go back to the 1987 crash. I just watched a video on this today, which was kind of interesting. It was a great video. Somebody had done just historical perspective and interviewing a lot of guys, and I think it was like a year ago, 25-year anniversary of the crash. So did you get any warning? You didn't get a whole lot, but you could see even on some of these indicators on a weekly basis, you were getting divergence. Okay. The indicators did not go to a higher high on the RSI, on the DI+. So this is why, when these things start to come out, and of course this is on a weekly chart, when these things start to happen, you have to pay attention to them. They give you a little bit of a flag that something's up. And of course, as soon as this starts to close down, starts to break down, it sure didn't waste any time. And this was a rapid collapse, as everybody knows. 1987 was a huge crash, and people actually thought the world was coming to an end. So anyway, right now we don't think the world's coming to an end. We're just kind of watching and monitoring. We think it's going to push higher. I'd like to see the Dow get above this point, but we're getting a little bit of divergence on some of the indicators, on some of the indices. That makes me think that we might have a little bit of a pullback coming up. So I'll talk to you more about various stocks that I'm watching and some things I'm seeing tomorrow. But that is about it for today. Have a great rest of the Saturday. And this has been Joe for Beyond the Chart. Thanks for stopping in.